Hi, and welcome to the Access Direct Opening Bell, your essential pre-market podcast. In just minutes, get key global updates, overnight trends, and market-moving factors that set the tone for the day. Whether you're a seasoned trader or just someone tracking the markets, this is your go-to briefing to stay ahead at all times. So let's dive straight in. On a Friday, and we will start with US equities, which continued their rally on better than expected earnings. The S&P 500 rose for the fourth successive day and finished slightly in the green, while the Nasdaq 100 finished up 0.2%. 84% of the 162 firms in the S&P that have declared earnings have bettered estimates, and this has helped keep stocks higher. In data, jobless claims fell to the lowest level since April, showing that labor markets were doing well. Elsewhere, ahead of the August 1st tariff deadline, President Trump hinted that the baseline tariff will be 15%. Coming to markets, the VIX was flat while the dollar index in the US 10-year Treasury yield rose a little. Elsewhere, gold dropped for a second day while Brent jumped 1% on tightening supplies. At home, the rupee gained along with Asian peers as the dollar came under pressure against the major currencies. It ended the day at 86.28. Going forward, with a week to go for the August 1st deadline on tariffs, rupee bulls will have to protect 86.75 on the downside to prevent a bigger slide. Elsewhere, data showed that India's manufacturing and services sectors topped expectations in July in a sign of expansion in economic activity. In bigger news, India signed a deal with the UK to reduce tariffs on at least 90% of items. Speaking stocks in the Nifty had a role reversal of sorts, ending 158 points down at 25,062. The India VIX rose 2% and closed at 10.7. Mid-caps and small caps also ended in the red. 8 of the NSE sectors declined, with IT and FMCG losing 2.2% and 1.1% respectively. The best performing sector on the day was PSU Banks, as it rallied 1.2%. Speaking Nifty members, the top performer was Eternal, which rose 3.7%, while Nestle fell 5.3%, becoming the day's top loser. Technically speaking, yesterday's candle completed yet another bearish engulfing pattern, which means we've had two of them in quick succession, a rare event. The battle lines are clear. 25,000 is vital support, while 25,245 is key resistance. Bears will continue to have the upper hand until we have a daily close about 25,340. Meanwhile, provisional data showed that foreigners withdrew 2,133 crores yesterday. The month-to-date outflow is now over 28,500 crores. On the derivatives, and the Nifty's put-call ratio went from 1.14 to 0.79, while the Bank Nifty's went to 0.9 from 1.0. Significantly more calls were added compared to puts, and implied volatility rose 7 basis points, which means participants were betting on a recovery. For options set to expire on 31st July, resistance sits in the 25,100 to the 25,200 area, while support lies in the 24,800 to 25,000 zone. Elsewhere, 1% out of the money call volatility fell more than similar distance put volatility, and that means that volatility traders continue to hedge against potential downsides. Speaking net index options activity, foreigners and proprietary traders were bearish, while retail investors were optimistic. Elsewhere, foreigners' net short positioning in index futures was flat at 145,000 contracts. Looking forward to the day, the GIFT Nifty opened 117 points lower. Asian markets were down while US index futures were up around 0.2%. Coming to stocks, Mankind Pharma and NAM India were at horizontal support, while MapMy India was at horizontal resistance. Concor, Deepak Nitrate and First Cry were at trendline support, while Lupin, Kansai Nerolac and REC were at trendline resistance. Speaking bread, 60%, 82% and 66% of stocks in the NSE 500 were above their 50, 100 and 200-day averages. Durable goods orders data will be released from the US later today. That is a wrap on the day's podcast. Please note that this podcast serves solely for informational purposes and should not be considered financial advice of any kind. For a comprehensive disclaimer, please visit our website. Thank you, and we will see you Monday at the same hour. Have a nice weekend.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.